Theo. Thank you for joining me today. It's so lovely to have you with me this morning. And just looking forward to hearing what you have to say. I think we're starting off on a good note in November after the World Cup and our victory there.
Yeah, wasn't it wonderful? Hello, Sherelee. Yes, I think just before the Rugby World Cup, and obviously that was before the Cricket World Cup, I had a look at what the bookmakers were giving South Africa to win both these trophies. Now, the bookmakers at that point gave you odds of 28 to 1. So that means if you put in $100, you would get 28 times that back, which shows you it was highly, highly unlikely. Well, are we going to do it? I don't know, but we're halfway there. And I think that shows you how unpredictable things can be. And if you rely on your ability to predict, because 28 to 1 tells you that people that put money on sporting events actually gave us a very, very small chance. Now, I'm not saying we're going to win the Cricket World Cup, but what we are going to do is we are halfway there, and it seems that we will be in the semi-finals of the Cricket World Cup. So we're in the game. And I think that just shows you how difficult it is to predict an outcome, because things can change and you can surprises can happen. And at this point in time, it's a wonderful surprise that we won the Rugby World Cup, and let's hold thumbs for the Proteas that perhaps there's another surprise, and we go into December as the first country ever in 1 year to have won both these World Cups. Will we do it? I don't know, but I'm holding thumbs.
Yeah, for sure. Either way, though, we can be proud of both teams. That's for sure. So I know one of the other things that I think will be top of mind for most people at the moment is the midterm budget speech, which happened on the 1st of November. I just wanted to find out, were there any key takeaways that you think is important to discuss for our clients today?
Yeah, I think there's a few things we need to note. Number one, remember the medium-term budget framework never gives details. And people are usually disappointed because the media builds it up as if we're going to get details. There's no details. It's never been details. It's not planned to give you details. But it sketches a few points. The first thing is, I think that we need to know that is important, and perhaps it is a good point, is for the first time in 15 years, we might have a primary budget surplus. That means if you take away the funding cost, our debt, the interest we pay, the rest of the government might just, the expenditure will be within what the tax income is. The problem, however, is our debt. Now, if you go back 15 years ago, around about 8% of the expenditure was on servicing the debt. That is now more than 20%. And that's where the problem lies. Um, Two other points I think we need to note is the minister clearly said that in the February budget, the formal budget, there will be tax increases. And he's talking about an additional 15 billion rand that he'll need to find. I don't know where the details are. What he did say in the press conference post that is, if the receiver of revenue overachieves as they are doing now, that means they do more than the budget expectation. That 15 billion might not be required to be in the form of tax hikes, but we don't know what exactly that will be. Just to put it on context, it means roughly 1% additional tax. And how that will work, I've got no idea, but he noted that. The second point that he noted quite clearly, and I think we need to take that as a positive, is that he noted that the lessons they've learned from Eskom is that if a big state-owned entity is in trouble and that entity is not doing what it should be doing, don't try to go and fix that broken entity. Rather look at the sector. So in the case, and he specifically noted in the case of Eskom, they redid the whole electricity sector in terms of private partnerships, private generation, the breakup of the sector. So they'll rather look at the whole sector. And in that realm, he said they are going to do exactly the same with the logistics sector. Not trying to fix Transnet, but rather create an environment for the whole logistical chain to work, which will include the private sector to a large extent. And on that point, in the budget in February, we will get more details as to how the government plan to have a different funding model for big infrastructure projects. And he noted specifically to crowd in private sector funding. So they are working on a mechanism for big infrastructure projects with the private sector as part and parcel of that. So in a nutshell, our economy is in trouble. The income is lower than expected. The expenses are higher than expected. We need to borrow more than we wanted to. So on all those metrics, we are in a difficult situation. The key takeaway is that we will get the details in February, and from what I could deduct, we might see some reforms in terms of how SOEs are funded. We will see some reforms as to how the private sector will participate where SOEs are not working. And he also clearly stated that they will review government projects. Those that are not working or legacy projects, they will simply try to stop them. So again, the speech is one thing. Are we going to get the positive follow through? That's always the thing that'll follow on this. So I'm not too concerned about what was said. There was no red lights. It was specifically telling us everything we knew. We are in trouble. Government realizes it, but the proof will be in the pudding in February. And I wouldn't spend too much time on trying to go through the numbers. It is what it is. We knew beforehand we are in trouble. And I think we need to wait for February to see if there's any specific changes that will have an implication on investors, bar for the fact that there is an orange light in terms of tax that will go up. But that's roughly where we are in the medium-term budget framework. And I do think what we need to look at underlying all of this, the bigger theme in world markets still remain this question about interest rates, economic growth, inflation. And Sherelee, I think that's more important at this point in time for investors as to where we are in that respect.
Yes, Theo, and I think it's something that we're definitely picking up on with our clients still. And I think just where we're at right now, I think top of mind for everybody is this whole topic of higher interest rates or higher inflation for longer as well. And I think it's maybe a little bit uncomfortable for some people. I think here in South Africa, though, we're used to having slightly higher inflation relative to the rest of the world, and we've actually managed to keep ours under control quite nicely. Throughout this period of time where things have been quite volatile. But in saying that, I think it's important for investors to realize that we are in a new interest rate regime, and with that comes change. And what we need to see then is governments, consumers, and businesses really just adapting and getting used to this new environment that we're in. If you listen to what the product providers are saying in the webinars that we were listening to at the moment, they also agree that this is going to be around for some time. And so with business, government, and consumers getting used to that, it will take some time for things to stabilize again in the markets. But at this stage, we aren't seeing any more negative news around that. I think we're at that point where most people are saying we're at the peak of interest rate hikes globally, and from that, possibly, I don't know what your thoughts are, Theo, but towards the second half of next year, we would then be able to start seeing hopefully some of those interest rates starting to be reduced again, which will be positive for investors. When interest rates start reducing, the market and interest rates work inversely. So when interest rates reduce, then the markets tend to pick up again. It might not be, all in one go and we just have a great recovery and everything's fantastic, but it is definitely positive news for markets globally, not just in South Africa. In saying that, Theo, I guess then maybe you can provide some insight into what the markets have done over the past month.
It's been a challenging month for financial markets. The JSE over the month of October lost almost 3.5%, whereas the MSCI World Index in dollar terms lost more than 3%. So markets traded down for the month of October. And I want to link to what you're saying, Sherelee. The two or three biggest themes in markets currently is, on the one hand, it is simply the effect that markets still need to adjust to higher interest rates. And when will inflation start to come down, and when will that allow central bankers to start to reduce interest rates? So that's the structural reform that you're talking about. Remember, since 2007, 2008, until about 2022, we were living in a world where money was cheap and liquidity was everywhere. So people internationally got used to this idea of cheap money and money available. And that change, that renormalization or reset, is still in the process of working through the system. Roughly speaking, it went from an environment of between 0.5% and 1% interest rate to an environment of somewhere between 3 to 5%, depending on which interest rate you're looking at. And that 3% adjustment is working through the system. The other side of the coin is we have geopolitical risks. And since early last year, we've lived with a risk in the Ukraine. And what markets there got used to is that fighting, the war, will stay within the borders of Ukraine, number one. So it will not spill over. And number two, Russia will not use nuclear weapons. So those two elements were kind of discounted. So in the Middle East, the challenge there is that although it's a human tragedy on all sides, the markets are discounting or are saying that for as long as Iran doesn't get directly involved and for as long as the US doesn't get directly involved, so almost that you never have a situation where the US and Iran is involved. This is what we're currently discounting. And I'm not talking about the human tragedy on all sides. That's not what I'm talking about what markets are not expecting. Markets believe or hope that the US and Iran will not get directly involved. But it creates uncertainty and it creates uneasiness in this environment where markets are starting to find its feet. So I think I totally agree with you that we are closer to the end of interest rate hikes, which means at some point we will start to discount when we'll see the first drops in interest rates. And those drop in interest rates will kind of be a trigger to financial markets. But we are in an environment where markets are still having to adjust to that. And that means if you look at that, it will remain a challenging time for investors, but also a challenging time for financial markets. And then we come to the point, so what is our view in terms of how do we advise or how do we assist our clients in this respect?
Yes, there, and I think at the moment the big one that is top of mind for most clients is really just around the exchange rate. And I know Yolanda discussed it quite nicely last month in our update. And the big thing there is really just focusing in on your individual plan. I think that's the key point here, because to try and predict how the rand's going to move week, not even just week by week at the moment, it's day by day. No one's going to get it, 100% correct at this stage, or at any stage really. But I think the important thing there is to stick with the right asset allocation, making sure that that's in place. And then when you do have capital to send offshore, I think it's important to zoom out. As you were saying, markets have taken a bit of a knock. If we're buying into the offshore markets, it's not a bad time to be buying in because the prices are much lower. So you've got to take that into account when sending capital off as well. And I think, again, if clients are nervous, it's just to then spread it out and phase it in over a period of 3 months if it's a large sum of capital that needs to be invested. And just on that point, I think it's important to highlight that we are nearing the end of the year, which is crazy to think, but clients do have their R1 million discretionary allowance that's available to be used by the end of December. So just a reminder to our clients, if you do still want to send money offshore before the end of the year, that's certainly one avenue that you can take, which doesn't require the lengthy process of going through a tax clearance.
That's now if you haven't spent your travel allowance on watching the Springboks in France. You have to remember, you have to deduct that portion from the R1 million. But I do think it's something that we need to take cognizance of. But I agree with you, Sherelee. This should be in line with your own financial plan and your own, whatever your targets, your aims, your dreams are. If your international exposure is below what you want it to be, look at this. It might be an option for you.
Yes, and please reach out to your financial planner, and we can certainly guide you in the best way possible for your situation. I think that's the important point here. Thank you, Theo.
Thank you, Sherelee, and all the best.